Hello, hello. Happy Monday to everyone out there. My name is Maggie Nielsen, and I'm here with Purse Strings. Today we have Bruce talking with us about reverse mortgages. So we're very excited to have you here, Bruce. Thank you.
Thanks for being here. I look forward to this.
Very excited to dive into reverse mortgages today. Anyone new joining us? This is Purse Strings. We are here every week at 1:30 Central to just provide some knowledge and expertise from our Purse Strings approved professionals who are vetted and approved to work with the female market. And so we love having them, our Purse Strings approved professionals. Bruce is one of them, but we also have FAs, CPAs, attorneys, all that good stuff. So Bruce, could you give a little introduction of yourself before we get started?
Sure. I've been a loan officer for 30 years now. I started back in 1992. I do regular mortgages in conjunction with reverse mortgages. But lately I've been doing more and more, just probably because I'm getting older and there's a need for it. And I really believe in it. One of the first reverse mortgages I did was back in 2004, and I actually did it for my mom. So I really believe in them. They're kind of game changers for most people in these situations. And I'll use my mom as an example. She was on a fixed income and was feeling the pinch of not having the cash that she wanted to do things. And so the minute I got her one, and she just kind of a big feeling of relief for her, she booked a trip to go visit my sister who was in Tokyo at the time. And so she spent 2 weeks with her over there and had a great trip. And then 5 months later, my mom wound up having quintuple bypass surgery. So she wasn't as mobile and doing that kind of stuff, but it gave her a chance to get out and do that and just change her life. And that's really what it comes down to. When people are in retirement, they are on a fixed income, and to be able to access more cash that's readily available through a reverse has been life-changing, quite honestly, for most people. So, when you have $2,000 or $3,000 a month fixed income and you're able to add $1,000 or $1,500 or get rid of a mortgage payment, it changes people's lives. So that's what I really like about it. I'm pretty passionate about it.
Awesome. And where are you calling in from today?
So I'm work out of the Northbrook office in Chicago, just north of Chicago in Illinois. But we're licensed as a company in 49 states, and I personally am licensed in 20 states to do regular mortgages and in conjunction with reverse mortgages as well. So I can help out pretty much anywhere.
Awesome. Well, yeah, I'm excited to dive into this because I think you're one of the only professionals we have doing reverse mortgages. And it's something that is not talked about as much. Maybe that's just because I'm younger. But so let's just jump in and ask, what the heck is a reverse mortgage?
What is a reverse mortgage? Right. The $1 million question. So a reverse mortgage is the opposite of a forward mortgage, which most of us have right now that we're used to. And I'll just try to keep it really simple. A normal mortgage, let's say you have a loan balance of $100,000 and your mortgage payment is $1,000 a month. And so we make that payment every month, and that balance goes from $100,000. You make $1,000 payment, it goes to 99, roughly, just for number's sake. And then you make another payment, and then it goes to 98, and so on and so forth. And that's how a normal mortgage works. Now, a reverse mortgage is just the opposite. So what happens is you get a reverse mortgage for $100,000. You don't make a payment. You're not required to make a payment as long as you have the loan out. Okay. But in lieu of not making a payment, what happens is that payment gets tacked on to the loan balance now. So after not making that payment the first month, now you owe $101,000. And then the next month, don't make a payment. Now you owe $102,000. So that loan balance is getting higher and higher and higher as you go on because you're not making those payments. Thus the name reverse mortgage. So it's just the opposite. Now, you can live in that house as long as you want. And once you leave the house, if you're gone for longer than 12 months, then you have to pay the loan off. Okay. So that's one of the main characteristics of it. So you can live in there, and we call it aging in place. So it allows the seniors to age in place, and you have to be 62 years or older to get a typical reverse mortgage. Now, there are some proprietary products that will go down as low as 55, but there's some different characteristics to those. But on average, most cases, it's 62 to qualify for that. At 62, you'll probably qualify to access 40 to 45% of the equity in your property. Okay. So if you own your house free and clear, and you have a mortgage, or I mean, the value of your house is 100,000, you could probably access 40 or 50 grand right out of the gate with a reverse mortgage. And again, you can access those funds three ways. You can do a lump sum payment. Okay. You can do a line of credit to access that. And then the third way is you can do annuitize a payment or cash stream for life.
Oh.
So that's the three ways you can access it. Most people know of, oh, I can get money for life out of it. But in actuality, you can for sure. But there's other ways to tap into this too, which are super beneficial and strategic ways that you can access that for financial planning too, which is great.
So there are a couple things that you said that I really want to point out. So one of them is that typically you have to be 62.
Yes.
So it's only for those above 62. The second is that the house is completely paid off, correct?
No.
No.
So that's good. I'm glad you brought that point up. So we can pay off an existing or forward mortgage with a reverse mortgage.
Oh, wow.
Yeah. So I'll try not to get in the weeds too bad on this, but I had a client that had a house that they owed $300,000 on, and the mortgage payment was roughly $1,200 a month. They only qualified because she was a little bit younger, in her like 66, I think her age was. So that's young in the reverse world. And she only qualified for a reverse mortgage of $200,000. So they were short $100,000 as far as qualifying goes, because they owed $300,000. She qualifies for $200,000. Now they had an annuity for $100,000 that they were earning $400 a month on. So what we did in that situation is we took that annuity and we paid her first mortgage down, her forward mortgage, to $200,000. Now she qualifies for the reverse, paid off that existing loan at $200,000 with a reverse, and that saved her $1,200 a month in mortgage payment, where she lost the $400 in her annuity payment, yet still coming out ahead $800 a month. So that's one of the strategies that we can utilize in there, is eliminating a mortgage payment, even if they do have a mortgage, by using a reverse mortgage, basically.
Okay. So that makes sense. Yeah. You can only take out kind of what the value of, what they give you. And the way she benefited is that she had less monthly payments for her house, which gives more cash flow for her to use. Exactly. What other requirements kind of go around the reverse mortgage that we should know about?
So there are some nominal amounts of income requirements you have to qualify. So again, not having a mortgage payment, it's not as bad, but there's still some things you have to qualify for as far as making your property tax payments and your homeowner's insurance payments as well. So what happened in the beginning, or years back, a lot of people were taking a reverse out and not paying their property taxes or their home insurance, and running into all kinds of trouble with that, because they're like, oh, I didn't know I had to pay this. But of course you do. You have to maintain that. So that's one you want to make sure. You have to get counseling for this too. So
interesting.
Which is nice. Again, this is all to protect the seniors, because what happens is they want to make sure that these seniors are understanding what goes on, and they really do a great job. They read all the literature that you give to them. It's a real education process. It's very different than a normal mortgage. And I really like it because people take time, and they have time to study this and understand it, but they're going to go to counseling. I'll put together a quote package that lets them know how much they're qualified for. And part of the qualifying process is it's really like an insurance product, because what happens is there's a life expectancy. So the older you are, the more access to your equity or larger reverse mortgage that you can get. So that's really important from that standpoint. I did a reverse mortgage for a lady who was 101. And so her life expectancy was only 3 years. So she got, a very access to almost the most that you could get. Okay. Right. So the other important part of it is how much can you get? Okay, so what is the loan limit on this? And they don't call it a loan limit, they call it a claim amount. So in the last couple of years, it's gone up considerably. So The maximum is at 970,200, I think it is.
Wow.
So yeah, it's way up there. But what happens is, let's say you own a house that's worth $1.3 million. They're going to base it on the lower of the two, the maximum claim amount or the appraised value, whichever is lower. So
Okay.
when you use that claim amount of 970, all the calculations as far as what you qualify for are based on that 970. So that's kind of how they qualify. So again, the older you are, the more you're going to get. And you really have to put it in the computer to see how much you qualify for based on your age. I can't just sit here and go, oh, if you're 65, you get this. I can give you kind of ballpark or approximations, but it's really easy to put it in the computer and generate a quote. It only takes, 5 minutes basically to do it. You just need your birthday, your address, approximate value, and what you owe. And that's pretty much it. And I can put together a quote. So real easy.
So it seems like if this 101-year-old lady is taking out this money out of her house,
Yes.
What happens when she then passes?
Yep. Great question. So in her situation, the claim amount when we did it was only 720,000 was the maximum. So she got 550,000 at that point in time. So she took that money and used it. She had to pay off some other financial obligations to free up some other cash for her. So that was kind of the strategy behind doing that. So she took a loan for but her house was valued at that time, I think at 1.2 million. So she lived for 3 years. She probably, again, remember what I said, you don't make any payments. So that 550, she probably owed 575 or maybe 600 even. But they sold the house, $1.2 million, pay off the reverse mortgage for 600, let's say, and then they keep that money that goes to them, to the estate, to the heirs. It doesn't go to the bank. Like there's a lot of misperception about that out there too, that the bank owns your house. That is not the case. You own it. You pay off your mortgage just like it was a regular mortgage that has to be paid off too.
And so it seems like you probably want to talk to your heirs or let them know that, hey, I'm doing this reverse mortgage. So don't expect, 1.3 million of the house. You're
Yes.
going to expect, half of it or whatever number you're working with.
Yep. And I love to engage as many people as I can in this conversation, because that's the last thing I want, is because there are negative connotations with this product. And it's like, hey, Bruce, you came in and stole all this money from my mom or my grandmother. And so I just want everybody to be informed. That's the most important thing. Like I said, education on this is great. And I really am a big proponent advocate of that, is, bring everybody in, bring the financial advisors in, bring the family and the kids. And quite honestly, most people are not doing this without their kids knowing, and the ones that are don't have any heirs to worry about. And it's, a better situation for them. So that's what we like to do.
And yeah, I was going to ask, it seems like, you want to pay off some of your other debts and there's a couple different moving parts. So is it usually just you, or do people usually bring, their financial planner or whoever that is? Who's kind of that team that you work with when going about this?
Yeah, so it's both. So I get a lot of these internally in my company, because I'm kind of the guy that does that here, has had the most experience, for now. So I get a lot of internal referrals, financial advisors for sure. So I talk to them a lot about this, because it's such a important part of the financial strategy in planning. And it's a way to extend their likelihood that they're not going to run out of money. And I can get into that more with any advisor who wants to talk to me, but there's great strategies to incorporate with that when planning. So, those are the people that I work with, and my existing client base, my database. I let people know that I do this and help parents, and again, getting close to that age where I've got clients and friends that are, maybe ready to do that and dip their toe in that water. So I just try to help those people there. Another really important thing that I want to talk about that I didn't want to forget is reverse mortgages have mortgage insurance on there. And so let me give you an example of potentially what could happen. We just talked about the lady owed 600,000. It was worth, 1.2. She netted 600. Okay. And that was fine. Everybody's happy. Now, let's say you have a client that takes a reverse mortgage out at age 65 and lives to be 120. Okay. And they have not made a payment in that time frame. And so now you've got this accrual of all these payments that you haven't made. So you started out with a reverse mortgage of 200,000. Now you owe 600,000 on your reverse mortgage. and your
Mhm.
house is only worth 400,000. So you sell it, guess what? You're underwater by 200 grand.
Mhm.
There's mortgage insurance in place that will satisfy that obligation. So you
Wow.
will never owe more than what you sell the house for. It's taken care of by the lender with mortgage insurance. So it's another great feature of this product that you can go with confidence and know that you're not going to have to pay more than whatever you sell the house for, even if you're underwater by a ton of money.
That's a great thing to know because yeah, you don't want to then, try to find $200,000. That's
Right?
not
And
easy.
pass that on to your children or heirs or whatever. And you're like, oh
No,
my
thank you.
God, you talk about phone calls that I'd be getting at that point in time.
Definitely,
Yeah.
definitely. So what fees are involved in this
Yep.
process?
Yep. And that's another objection that I get from a lot of people. So the fees are kind of expensive. And I want to be, upfront with that just so people know and set the right expectations, because what that mortgage insurance costs, they charge 2% of the appraised value. So let's say it appraises at 400,000. So they're going to charge 8% for mortgage insurance. Okay. And then after that, there's an origination fee that goes to the bank, to us, basically, and how we make our money. And that can be anywhere from $4,000 to $6,000. So now let's just call it 14,000. And
Mhm.
then you have normal closing costs for a transaction, which would be mortgage fees and title fees. So we'll call it $3,000 right there. So you're upwards of $17,000 to do
Mhm.
these loans. And people are like, are you kidding me, Bruce? I'm not going to I'll just go get a home equity loan or something like that. And I'm like, yeah,
Right.
that's fine. Absolutely. If you can do that and you want to do that, by all means, do it. Now, the problem with a home equity loan is there is a time frame on it. It is due and payable in 7 years, 10 years, something like that. And then you have to do something. And most of these seniors in this situation are going to be using the money from the home equity loan to pay the home equity loan. So as you can see, it starts to snowball on you because it's getting
Mhm.
bigger and you need to pay more, and then you have less to pay it with. And before you know it, you're tapped out. You can't use it anymore. And oh, by the way, you're on a fixed income. And now this line of credit that you took out for 150,000 is due in conjunction with your other mortgage. Maybe you don't qualify. And then if you don't qualify, they could foreclose, or you got to sell your house, and you're putting yourself at risk at a later part of your life when you're maybe not able to handle something like that. So that's the home equity argument. But hey, it's absolutely a cheaper choice. It's, sometimes zero cost of 500. If you can do it, I absolutely recommend that. Okay. Then the other option is a cash out refi. Okay, well, I don't have a mortgage. I'll just take a cash out refi. I do that for a ton of clients too versus a reverse mortgage. But it's still a mortgage payment that you have to make every single month. So, that's the conversation I have, regularly with each client, each and every client that I talk to. What's the best solution or situation for you? Now that cost, let's go back to that 17,000. That comes out of the proceeds. So they're not writing a check for that or anything. So if they qualified for 100,000, they'll take 17,000 out of the availability. And
Mhm.
so now you can only access 83,000. Okay. So it reduces the amount that you can access. You're never coming out of pocket with it, which is a nice situation for most seniors too, because they don't have the liquidity either in most of those situations.
Yeah, that's a heavy upfront cost for sure.
Absolutely.
But if you can take it out of the house as well, that's also very helpful.
For sure.
And so if you were to do this, kind of what are the first steps to get started, or documents and information that you need?
Yep. So the first thing is I just have a phone conversation, and like I mentioned before, I get birth date, address, approximate value if there's anything owed on the property. And with that, I can generate a quote and put all the numbers together, and we can talk through different scenarios, because with the reverse mortgage, they have variable rate mortgages, they have fixed rate mortgages. And again, depending on their situation, we'll talk through those and see what's most advantageous for them. That's how we do it. And then as far as documents, similar to a mortgage process, or regular mortgage process, we're going to look at tax returns, because
Mhm.
again, they have to qualify with some income. We're going to see Social Security awards letters, just how they generate their income, and bank statements to show that they do have some assets. And so, that's kind of the copy of their Social Security card. That's
Yeah.
one. And then an ID, a driver's license or a state ID or a passport that's not expired, are typical documents that we need to get going on things.
Okay. Okay. So yeah, this is making a lot of sense of, why you might do this. You get some cash flow. You already have a lot of money into the house. So you're probably going to stay there. You said you have to be there have to have it as your main house.
Yep, has to be your primary residence. Another good point.
Primary
So
residence.
it can't be the second home in Florida. It's got to be a primary residence. And if you're not there for 12 months, then the loan has to be paid back. So let's say the senior passes, and then what happens is you have 2-3 month windows to sell the property, and then depending on the market and everything, they'll probably grant you an extension to go 6, but typically it's 12 months to sell it. And you've got to show and make a good faith effort that you're trying to actually sell the property. So that's kind of how it goes after the senior moves out or passes away.
In this market, I'm sure you'll sell that house.
Right, exactly. For sure.
And there was another question I was going to ask you that is just fleeting my brain right now. I don't know what it was right now.
Okay, no worries. I'm trying to think of anything else that I haven't touched base on. But the mortgage insurance is huge. I like, there's another aspect of this. This is fantastic. And I'll use my mom's example again. So when she qualified for her reverse mortgage, she qualified for $150,000, and she had a line of credit that we got for her initially when she bought the house for $50,000. And so we paid that off with the reverse, and then she had a line of credit for $100,000. So, and she didn't touch it for 3 years. Now, the line of credit, the unused portion, has a growth rate component to it. So what that means is, based on the current market rate, and the current market rate is roughly 5% right now on that component, that line grows at 5% a year. So a year later, she has access not to 100, but 105,000. Another year later, about 111. And then the next year was about 118. So it's, interest compounding on that she has access to just because she didn't use it. So any availability that you have on a line, it will grow each year on the unused balance. So what the purpose of that is, people aren't losing out on appreciation on their property. So it's a way for them to kind of give back and let them, participate in the market appreciation, if you will. Not, obviously not 100%, but at least on some portion of it. And, for my mom, it was fantastic. She had an extra $18,000 when she started actually drawing on that line of credit. So, it's a great thing. It's guaranteed. And so you don't have to worry about that. And so, from that standpoint, it's a really good thing. So I like that.
Sounds like a huge benefit.
Yeah, it's huge. I mean, where can you put your money and get a guaranteed rate of return at 5%? I mean,
I would love to know.
Tax consequence, right? So it's huge.
And so, if people are out there watching, what are some signs that might say this is maybe a better idea for me to do?
Sure. I mean, in my mind, everybody should look at it at age 62 as part of their financial planning. Okay. So again, you might be allocating those funds elsewhere, whether it's, into a different investment account. Technically, you're not allowed to do that or buy annuities and all that kind of stuff. But there's more strategic ways to utilize your money on a monthly basis. And should at least review that from that standpoint for sure.
Okay, that sounds great. And then one of the last questions I have for you is, if a couple is living in the house together and one of them passes away, does that affect this reverse mortgage?
No, that's a great question too. So we have some situations where the guy is 65 and the lady is 58. Okay. And he passes away suddenly, and now she's in there. It used to be that she couldn't qualify. I mean, she'd have to move. But we have a non-borrowing spouse situation where she is on everything. But the difference is, we don't base the amount that they can get on his 65. We base it on her at 58. So that's how we handle that situation. So the good news is she doesn't have to move and can stay in the house as long as she wants to. So that was a big improvement in the product, as of 5 or 10 years ago that they put that together. So it's been really helpful.
So she kind of gets grandfathered into it.
Yes, exactly.
That's great, because after you lose your spouse, I'm sure the last thing you want to do is go move as well.
Right? I mean, talk about piling on with everything. That would be a terrible situation. So it's a great avenue for them too.
Well, it seems like we've covered a lot of great information, and it's, you covered a lot of things. There's definitely more conversation, and you have the counseling to really understand what's going on, which I love. And I wish they did for more products as well.
Right.
Because you do need to know what's going on with your finances. Your family needs to know so they can plan and expect. Are there any last tidbits that we forgot that we should make sure we cover today?
I think we got to everything. That's kind of a higher level that I wanted to do. Just, again, qualifying at 62. You don't have to have your house paid off. Mortgage insurance is going to cover any shortfalls. Line of credit growth rate is exceptional. It's a really great feature. The cost, I wanted to address that too. That's good. I'm glad we touched base on that. But bottom line is, hey, these proposals take 5 minutes for me to put together. So I love having conversations with people just to see if it's right. And again, open up into discussion, educating people on how this works and seeing if it's right for them. Like I said, I have no problem. If a regular mortgage is better for them, I'll do that. If a line of credit's better, or if a reverse mortgage. But it's great to have these conversations because I feel very strongly about it that these will help people in solving a lot of the retirement financial planning situations and give them the longevity they need to not outlive their money. So that's one of the biggest components of it that I like.
I definitely agree. And, Barb and I were talking about before this, and, you'd much rather take your own money out of your own house and spend it on yourself than make your kids fund you or not have that life that you want, but then they get the house later, and so it's your money. You do what you want with it. You're going to die. You don't want to die with all your money.
Right.
So you might as well spend it and live your best life.
Right. And it just gives you discretion about that. And if you want to age in place and if you get sick, now you can have in-home care, do a lot of that too. That's why these are generated a lot of cases. So just so many different options. I keep learning more and more. Oh, one other thing, you can purchase a home with a reverse mortgage instead of a regular mortgage. So that's a really good feature too, that you can take the money out, buy a new place. I just talked to a lady in retirement and she said, I'm going to buy a place for 150. I said, well, she goes, I'll pay cash for it. And I'm like, well, you can buy a place for 300 now, put the 150 down and you can buy a much nicer place. And she's like, oh my God, I didn't even think about that. But that's the kind of stuff that you can do with these. So again, lots of different options.
Have the conversation. Nobody's cookie cutter. We just have to open the conversation, ask the questions, and, see what's best for us and working with these wonderful professionals.
Absolutely.
So thank you again, Bruce, for coming on today. What's the best way for people to reach out and contact you if they have any more questions or want to go about a reverse mortgage?
You can email me at my first name, last name. So bruce.bufe@dkmortgage.com. DK is like Draper, Kramer, mortgage.com. Or you can call myself, 847-819-9800. That's my cell. And I answer that all the time. So
awesome. Bruce is also one of our Purse Strings approved professionals. So you can check him out on our site, pursestrings.co. And we will be here again next week with another Purse Strings approved professional, just getting some knowledge out there. So thank you again. And I hope everyone has a great rest of their day.
Thanks, Maggie. I appreciate it.
Bye.
Bye.